Okay, it's Friday, 5 a.m. Denver time here in Arizona. January 27, 2017. Today we have United States has GDP, and I have some time to kill here. So I'm going to run through some charts of interest to moi. I'm going to start off with the put-call ratio. Okay, I have three put-call ratios here. The first one is total put-call ratio. Okay, what I'm looking for here is the spikiness. I just kind of eyeballed the bell curve of where the ratio lands, and then I just kind of looked and said, okay, there's some spikes here that correlate to here. It's the S&P 500. All right. Frothy call buying. We had some in late December. Okay. So I was leaning short. Sometimes leaning short takes a little bit of time for the options to unwind. The trend is up, and that trend has been up for a long time. Like basically since you were born, the market goes up. What happens there is the hubris comes out, the new stuff goes in, and that's why it always points up. For me, the grand cycle started in 1933 at the bottom. The next cycle started for me at the bottom of Richard Nixon's stay in office until December of 1974, where the Dow was at 500. As you know, I dislike the Dow as an index. I'll take the S&P over the Dow. Even though you get the market right in the direction, you may be in the wrong index. As I pointed out early in the week, the NASDAQ since the bottom has been outperforming. And that's where it should be, right? Growth, new stuff comes on board. You want to get, you look at where Apple is compared to its IPO, or Microsoft with its 15 years of dead money between 2000 and then 2016. All right, so getting back on track here. So the put call ratio up above here, when it's spiky up here, it's frothy put buying. You have your little bottoms here. This would be after China deval and some unwind in the currency market. Here would be after the first rate hike coming into this. This is, we were at what, 1850 or so. I had a target of 2400 for 16. I did actually stretch it from 2200 from my May of 2013 post when we were at 1600, and I said we were headed to 22 by 16, and I stretched it at the low here to 2400. And then pre-Brexit, wherever we're at pre-Brexit here, I said, I don't want the last 10%. So between now and 2,400 or something, I'll pass. I'm looking for the stock market to double, the S&P to go to 4,750 by 2024, which is the 18.3-year cycle of real estate in the United States. So somewhere around 2023, 24, that should be the top and i.e. bear market. I also posted a chart a few times on the Russell of the run-up from 1994 to 2000 and the number of pullbacks. In 1998, when Russia defaulted on its debt, the Russell dropped 38% in 1998 before basically doubling. Okay, so even though the market is pointing higher, you can have drops of 7%, 8%, 10, 12, 15, 38%. So basically, pre-Brexit, I kind of got a little on the defensive side. One, we're in a tightening cycle. The first time the Fed raises rates, the market usually peaks within 36 months. The last time we raised rates 14 times over 17 months. 17 months, okay? And that was from 2004 to around 2006. The real estate market peaked in 2005. The stock market peaked for the first time ever in October. And that was 2007. So I turned bullish at S&P 683, and that was off of reading the sentiment in the options market. At 683, I looked at a 700 call, and the premium was priced like $16. so the marketplace wasn't even looking for 700. I go, 700, we were there yesterday, and that was the trigger, off to the races. So here we are, 8 years in the bull market, a little long in the tooth. We're actually playing with the interest rate factor in business on your spreadsheets now. No more writing debt and buying back stock. You have to kind of do it on your own. Fiscally, POTUS wants us to divert funds, kind of run them through the United States here. United States is 19% of the world GDP. If you look at the happiness index, how happy we are, yeah, that's a different story. So, all right. So basically what we have going on here, all right, basically what we have going on here is a frothy put call ratio up in here. This is post election pause. And we had a breakout here of the Russell, I think, is lagging on here. But the smaller caps, the mids, are going along with the story here. You know, it's 400 and 600 on the S&P, besides the 500. We did have, what is this, Friday? Wednesday, we did get a spike down in here, so I'm leaning short. I'm building a portfolio mostly of put options as far out as possible, like January 2019, okay? We're strolling into a recession, you know. The dollar's stronger, so that should help to drive commodity prices lower. I'm watching Mother Nature, because as much as we want to do things from the monetary side and the fiscal side, Mother Nature still stomps on stuff. Brings us pestilence and, you know, locusts and droughts and floods and all that fun stuff. And Monsanto brings us neutered seeds. Those bastards. Neutered seeds, what's that, Kev? Well, it's not the proper term, but that's where you have a bag of lentils and you go in the backyard to plant them, and they won't grow because the seeds are neutered. That's why Grandma had the pantry of beans and stuff. It wasn't to make a big pot, one meal of peas porridge, hot peas porridge, cold, but to go in the backyard and plant the peas and the beans and that. And then you have a crop of fresh stuff. I prefer the fresh string beans and things, snow peas, all those good ones compared to the dried or canned or frozen. Frozen comes second. All right, so I'm leaning short here. So what I'm looking for is I'm looking for put options as far out as possible. I'm not a big fan of options, but this is a strategy, okay? So SPX and Qs and Dow, you know, when we swing into a new high and the put call ratio goes goofy, I buy puts. Why? Because it's going against the grain, so I expect those to be cheap. I mean, Kevin, the stock market's been only going up since 1933 under your little verbose there narrative. So, but that's what I'm doing. I'm just going against it. Will a 7% drop help the portfolio? You betcha. Okay, because it's options and they're out, so they're going to get spiky. The implied volatility is going to increase versus its historic. Last time I played this little game was back in August. I posted a VIX chart. VIX was at record lows. I hedged 9 months out. This was July 31st. It was 9 months out. I suppose I could actually find it real quick here. Yes, I owe somebody another nickel. All right. You seen a dip. Dip in what? Full sentences, people. You see in a dip. All right. So, let's see here. Apple or Disney taking out 90. What am I looking for? What am I looking for? Down here. Boy, I'm very, here we go. Ideas. Okay, so I'm on you. Okay, here we go. So back in, what's this, July 31st of 2015, I kind of scratched my little pithy, it started off with Rush Hess. Rush, the band, has major final concert tour show. World goes into mourning. Fifth Apple on Monday. So what do we have here? We have Apple earnings coming up. Kevin's little pithy thing resurfaces, and this is July 31st of 15. And we know Apple peaked out in 15. And the earnings are on the table, and I sent something out to the world. That I'm taking another stand against Apple. Did we get the 34% drop? No, but we had a hell of a spike, right? So Puts for Profits, I think that's the title of the book, was written. We were in a roaring bull market, and so, hey, write some puts. I mean, how often does the black swans show up? And hey, what do you know? It was a strategy, selling puts, just like selling car insurance. You know, I've paid for since Reagan was in office for car insurance and haven't had a claim. But then again, I'm only driving 1,500 miles a year. So puts, they sold puts. Guess what? The market went against them. It's a couple of things you do. You go in and, I don't know, take your losses. But they're so great. Or short futures against your puts to hedge. You betcha. Pull the triggers a lot easier than cutting the losses. We beest humans. Only a few of us are wired that way. I won't go into some of that, but if you're slightly brain damaged, you outperform the marketplace because you don't have any empathy for your money compared to apathy. Lots of studies done, but we had a spike here. And that was basically it. Way, way, way high. Do I see another one of these coming? Well, it's going to have to come from Washington is the only way I can look at it. There is a grand cycle of scheme where, you know, there's enough. You have to have the growth, right? This is, if we get down to the nuts and bolts of all of this, there has to be some sort of valuation here, right? Thus, equities can't be treated like beanie babies or tulip bulbs or Bitcoin, you know. You have to have some intrinsic value besides, but equities are basically worthless. Equities are basically worthless. All right, mini crash. So we get a little spikes into the 50 area. All right, 50 area. Blah, 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 yada, yada. Real estate peak, .com bomb, Chinese crash 2. Chinese crash 2, what do you know? I wrote and talked about it, but nobody did anything until the following month. And the following month, I just chucked something up. So we get down, no, we have to pat myself on the back. ISIL, Putin, Ukraine, and frickin' FIFA again. VIX calls are historically cheap. Kevin Vance, that would be me. Hedges to March 2016. 2016. What the hell happened in March, by March of 2016? Continuation of Kev's pithiness right down in here, right before August. VIX goes to 53. Previous statement, I stated that VIX, on this one here, 22 to 24, hit 23 here. Next, last week, I think I sent something out that the target's 26. I stretched this here, just up in this area. So VIX of 34, okay. I'd have to say somewhere around 1850 in the S&P. Do you think we can get to 1850 in the S&P in the next, by January of 2019? You know, but judging it, what we have going on here, we have, this was the VIX record low. I'm hedged all the way out to here. Okay. The market actually dipped further, but the shock in August of China devaluing just really messed with the markets. There was an opportune time. And that one was a, if you go back and look, my post, buy opportunity, one shopping cart. And then January and February, that was a 2 shopping cart buy here. Okay, that was 1850, I know that much. All right, so we go down, we get, where are we at? 2016, we get ourselves some Brexit. We get ourselves a little bit of, I call it the Patsy plunge. You know, if we ever wanted to have ourselves a depression, we have the right cast of characters for right now for it to work. I'm not going to say it's coincidence or causation. But if you ever wanted to, because you can only go so far, kind of like the British and devaluing the currency. They've been doing it for a long time. I think I don't personally remember, but I remember seeing something about, takes $4 to get a pound, and now we're at $1.20. And I still stand that pound and the Mexican peso will be some of the better trades on the long side for 2017. So my little pithiness, we get to 53, this is an August 15 kind of thing. Actually, I started stocking the short side of this when we hit, what was it, 2134 in the E-mini, I believe, 2134, I think was the high. I started here. So what did I start doing? I started buying put options as far out as possible when I to snag this. All right, just like on this one here, I snagged calls. Okay, and I had to get rid of it last week. It was a triple or something, but that's not bad, right? You triple it here, whatever, to a year, but see, I'm angling the portfolio that way. So even though it's one leg, my delta or bias or whatever my bias was negative. My bias is negative again here too. I'm trying to work something in for a recession. How deep do I think this can go? Well, we definitely didn't solve depression economically, but you just have to set it up when it comes to that. The worst part about and my type of deal of looking at charts and that is at the end game, at the tops and bottoms, basically at extremes. Percentages are getting a little more spiky. I mean, that train has a little in motion, stays in motion, momentum. It has that thing going on. But the deal is that there's enough stuff in the background to go after. And I had one this morning. Let's see if this works here. Comcast. All right. So I ran through earnings in that, and I sent some out. Just run through them real quick. If I'm only going to spend a second looking at a chart, I only hope to talk to it for about a second and a half and move on. Comcast. Okay, so what I'm looking for is this red line here with this chart package is unbalanced volume. And I didn't care much for it over the decades, but I like it a lot off of this chart package. Basically, unbalanced volume, I look at it as the onesie twosies coming in, and then I use the money flow, which is the yellow guy, to see if there's any divergence up there. And my personal favorite started with the RSI, but now I cheat. I use the ADX. RSI is kind of a momentum deal. One step forward, two steps forward, one step back is +1. 2 steps forward, one step back is +1, and the original +1 is +2. So what I do there is look for divergence, okay, and basically go against the grain. These are logged charts, so you just want a nice graph, 30 degrees, 45 degrees, but once you start going 70, 90 on this thing, there's a little bit of a clip. So this is a weekly chart on Comcast. It's at R1, and here's R2. So I'd start, you can play this a couple different ways. However you want to do it in options, say like calendars or what have you. I look at it as I want to buy puts against this as far out as possible. Here was a period where it had a good clip. The little line up here, this one was actually S2 in 2015, and Comcast went from 63 to 49, okay? So that works out to what, $14? Okay, so $14. That's probably going to be a lot more than what the option is pricing in, right? Right. So here's one. So this is what I do. I just go up against it. It's at an extreme. It's at the thing here. I just put it on. I'm going against the grain. Unbalanced volume was overbought. You can see here it was overbought, in relation. And it, what did we do? What's that say? 52, 62, 62 to 52, $10. All right. So that's all I'm doing. So I'm running through here, finding some of these that are extremes, and then go out. What did I have for Comcast in my Dodo account? So I have some here. 77 puts at $10, $5, $5. I guess the 77 at the money puts, 77s at the money are $5 for August, $3 and change for April. March is $3 and $1.50 for February's. So that's just, you just get a rough idea. It's okay. I throw that on there and I move along. So Comcast is one, unbalanced volume was up there, blah, 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 yada, yada, yada. If I have time, I do the earnings ones last compared to what I usually do. One, I'm not a big fan of options, but I will watch them during earnings because you get the huge moves. You know, I've run through enough of these things that I think the batting average is pretty high. But the deal is you know, this is money, right? Hard-earned money sometimes, and you're going in here, and this is basically coin flip speculation. And here's the other one too: is the options market, right? You have pre-market options might not be open, right? So you are right, and then you can't get out, and you're wrong, and it hurts. The recent one is probably gold and the Italy referendum. You were right for about $9 or $10 or something, and then when you were able to get out, it was on the wrong side, something fierce, and it continued on. Gold dropped another $150. All right, so which was a timing thing too. That one was one also. Psychology. I try and deal with what's between your ears. So if everybody wants it, I don't want it. When nobody wants it, I want it. Everybody wants Comcast per se. My little muckety muck up here, basically it's 8 indicators. I just eyeball this quick. Here's a clean cut grouping. All right. Usually on here, there's about 3 signals. I'm looking for the grouping or something to stand out. The blue line is ADX. So when it hooked down, it told me at least the market would stop going in that trend. And ADX is a trend indicator. All these things are kind of jammed together. You get jammed together, it comes down. If you're long, there's a couple of things you can do. You're going to assume that calls are going to be pretty pricey, right? If you go back and say, well, maybe I'll hit this line down here that we blasted through, and you just sell some in the money calls, which is like $8 plus $10. So you're long, you sell some in the money calls for some time out, 3 months, 6 months, 9 months, whatever. You can adjust it, you know, plus their calls. You can sell some at the money. Oh, I don't mind getting out at 52. You know, make another, what's that, 6% or so, 6% for not 52, 55. And someone's going to pay me $1, $2, or $3. I'll take it. Signals are telling me that's about it. So, when it comes down, that's the strategy. The whole deal is to have a plan. Warren Buffett is not a day trader. Day traders have to come in every day and get this right. They got to come in and get this right. These are weekly, so they're not. Now your job is only Monday to Friday, Tuesday and Thursday, or Wednesday. All right, so you have to come in and get this thing right. If you snag a trend, little pink dots here are SAR. A lot of these are just default. If it's a 14 or something, I'll put it down as 10 because I'm looking for it. I anticipate the market. I don't react. So what I'm doing today is basically for Monday, okay, or next week, or next month, or next year. If something moves today, if it's on the most active or the greatest change or what have you, I'm already in it. You know, it comes down to am I right or wrong, right? And you know, and then it comes down to money management. So how I operate is what kind of return are you looking for? And when do you want it? And then I work a plan. I reverse engineer. I've done this long enough, cycles and everything. And the biggest problem I've had with my altruistic ways is I stand on my box and in 2000 and 2007 and say, this isn't going to be pretty. In real estate, the same thing. It's an 18-year cycle. This is the end of it. What are you going to do when you have one income and your house drops 40%? You buy more homes. That would be the blood in the streets. When you're about to lose your job, lose your home, lose your spouse, and all of that comes when the circle gets smaller and smaller and smaller. That's the time to go shopping. When everybody's giddy, and buying toys or adding on to the house or, going in debt further, that is their comfort level. And then as a whole, the humans all behave the same way. They all go out and do it because it's kind of like betting on a 16-0 football team to win the Super Bowl. It kind of gets lopsided. I'm looking for lopsided stuff. Like this Comcast here, the unbalanced volume is up here. Now, can it go up to 84? You betcha. That's fine. I'll take more of it. Bring it on up here. That's fine. What I'm doing really on these weekly charts, I'm looking for extremes for this year or going forward of playing the S2. There are times when it'll go from like, here's S2, and it actually comes down to, through pivot, down to R1. We're at R1, can it come to S2? That's what I'd be aiming for. And what is that, 76 to 44? Put that in your pipe and smoke it. What is that, a third? Yeah, it's about a third. So that's what I'm looking for. So when I see these, going, like I said, I only have the stock market doubling over the next 7 years or so, going along with the real estate cycle. I'm looking for some sort of pullback. I've been looking for it since, some sort of, corrective nature thing since pre-Brexit here. This last whatever, you guys can have it, because like I said, I look at it as I've been in this thing forever. I'm looking, no matter what, we go forward. Even if we've figured this all out, and the money situation, the monetary situation is perfect, and the fiscal is perfect, the humans will still value the utility of items like Beanie Babies or tulip bulbs or Bitcoin or soybeans or corn or wheat or water or what have. They've done that with cable, right? Kind of a shocker when you can't afford something like the boob tube and you cut the cord, and that tells you something. It tells you that we as Americans live on $1 a day. It's pretty bad for what we have. It's pretty bad. So, but here we are at R1. All right, so Comcast is going after the puts on that one. All right, so getting back to on here, what do I have going on? The put call ratio, so it spiked down here again. So on any strength on today's GDP report, I'm looking for to buy more puts, right? I'm as far out as possible, going after things that I think won't favor so well in the future. I have a full portfolio worth of it, a lot of it, of stuff all over the board. Short Disney, short Apple, short, we'll say short Google, short Amazon. I mean, how is Amazon going to handle the next recession? It's not that I'm a bear, because you have to think this one through, that from 2009 until June 20th of 2016, I've had a long slant on this thing. And I basically kind of gave up here. All right. But like I said, you get everybody on the wrong side of the train, just like back in January and February. I'm all over it. Of course, I'd like to see it drop further. If the stock market follows Richard Nixon's little path, I will say that Trump and Nixon have the same dark triad bouncing around upstairs. The S&P would go to 1,600, then to 2,400, and then to 1,200. That would be what the S&P would do if the stock market follows Nixon the same way, or it follows Trump the same way it followed Nixon. So it would go to 1600, then to 2400, and then to 1200. And I will definitely take that one. And that would be my plan, Stan. See, so I just looked out what that was over 7 years, 68 to 74. Yeah, right, 68 to 74. 6 years and change. So Donald, in theory, in my eyes, is a one and out termer. Whoever got in there would be one, because we're going to run into a recession here, one way or another. But using the Great Recession, the Great Depression, we're in that late 1930s deal. So what I'd like to avoid is WW3 to solve the labor issue. I mean, we shouldn't fight each other. We should fight the robots. It just, kids are born, give them money, go to school. If they find a job, if they decide to be labor, when you have 84% service, we should just free up everything. Okay, so put call ratio, frothy down here, frothy down here. Some call buyers, some looking for shorts up here. Like I said, I don't think any of these post-election swings are going to hold, and that we actually go below down here. So under 1850 is what my initial target would be. The election, where are we? The election low kind of thing, which is, we swiped down 2020 down in that area. We swiped under here and went higher. So defensive in nature. Not everybody's portfolio is indexed, but that's basically, the market is pretty selective right now. I suppose I can run through some of these real quick. What I have going on here is this is the bull of the S&P 500. So 500, I take the 500 charts and see if they're in a bullish phase in their point and figure chart. So if they're basically pointing higher in that direction, that's considered bullish out of the 500. Then I divided it by the VIX on the S&P 500. Yes, there's an individual VIX for the S&P 500. All right, so I have this going on, and this is a couple of years, all right? And this is the S&P and a correlation here. So what it is basically if you have, what do we have here? Divided by the VIX. So you have a high amount of stocks in the bull phase and a low VIX, like currently we'll say. This is the ratio. And then I'm looking for the breakdown here. So you had the breakdown underneath with the issues underneath, like I call them the pink dots on the other chart, summation index, was rolling over underneath before it finally swooned. Same type of deal comes up again. Now we're actually higher. So we have even more stocks going higher. And a lower VIX per se, I don't know in general for issues. Longer term, back the bestest frothy or bestest strongest bull market was back in 2014. So in my case, I have to look at this as well. We might get the blow off thing here. The VIX part's already low enough, right? We already know it's at this level. It's already at 2014. We're waiting for the number of issues to follow. So what I'm looking for here is, obviously this has the momentum. If we go to 2,300, 2,400, that's fine. Remember, it's a percentage thing. Like I said, how about this one? You guys can have the last 10% up, but I'll take the last 30% or the next 30% lower, that kind of deal. I look at it first off, it's not as much a speculation as capital preservation, as I'm still shocked that nobody really bit money manager wise in January and February. It's hard to believe, that little old me can, kind of snag these things here. Got to get out of my cabin. Cabin in the woods, Kev. Got to get out of your cabin, buddy. You got to go help all the all the chairs there at our higher educations to stop losing billions of dollars to economic cycles. Come on. How do you not know that there's an 18.3-year cycle in real estate? I mean, you know, diverse into hedge funds. And then that was just whatever. All those endowments, right? Lose billions of dollars. I think, what did I read? The University of Toronto lost like a third. It's the whole thing of academics. Plus, you have all the banana heads that graduated from the place, you know, that kind of thing. So, whatever. For all I know, they're just stealing the money. You know, oh, well, gee, that was the worst thing in sight. Who could foresee it? What? Well, the signs are there, right? I mean, hello, whatever. I'll jump up and down again. And they're all going to go over the waterfall. They all do. They're humans. I'm not a contrarian all the time. I just wait for the frothiness. The minions is jumping up and down. They usually tell me when the top's in. They can't help themselves en masse to be just jumping up and down. Oh, I'm like, whoa. Oh, what is it? NVIDIA was one that just jumped up and down about, oh, the stock, look at it's been doing for the last 25 years. Oh, now you bring it up, you know. And we have somebody who wants to short it. We got to bounce about 108. I should look that one up while I'm goofing around here. All right, I'm just scanning through these real quick here. Oh, yes, something mushy like your spasticky like that. That would be, I'm also a musician, right? So that would be like my oscilloscope for, what is it, voltage? I should go take that course. That'd probably help out. Yeah, the volume and the pitch, tonality, timbre. So, you know, boom, look right there. You can tell the guitarist lost his G string. All right, so back on this and moving forward. Like I told you, I had time to kill. I have another 45 minutes to kill. I wonder if I should save this one here and do the regular deal. Probably. We'll save this. This is just going to be a teaser then. All right, so there's the second one. What do I have? NASDAQ Composite. Frothy put buyers. We had a frothy put buyer prior to the November 1 dump deal there. Here's Brexit. This would be frothy call buyers. Frothy put buyers, mark the bottom. Frothy put buyers, mark the bottom. Here was a heavy spike on the call. We basically had a retest of the breakout, and now we're moving higher. I believe this is logged, but I'm not sure. And then we didn't get the spike here, and this is individual equity put call ratio. I wrote about that. We need individual equities. So we already know with the pink dots that we're running a little shy on participation here. The patient, the market, is not getting enough blood circulation. Two schools of thought there. We either have a divergence or the rest of the market is going to get frothy and the people are going to chase after anything and everything. And they should do it with IPOs. Get them into a frenzy for new stuff coming around. It's like the carrot. Here comes the carrot. It's called WhatsApp, Smart Chat, Flip Flop. Wow. Yeah. Whatever. Some sort of hot AOL type IPO. You know, how to pull money. Just gotta love capitalism or free market on that one. All right. So, free enterprise, whatever. What do I believe in? Free trade. Low taxes and a strong sovereign state. There we go. I said that one time. Some guy said, well, who said that? I'm like, hold on. Who do you represent? No, I don't want to go to Washington in my grandfather's footsteps. All right, so yeah. Manage continents. How about a whole planet? Wouldn't that be interesting? I should learn magic. Magic in sales. Now, take a look at what I have in this hand. This would be pollution. And in this hand is how to clean it up, and they don't see the trick. All right, so frothy call buyers here, NASDAQ composite, yada, 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 blah, blah, blah. We had a spike down here. We're not getting it on the individual equity options. So I wrote yesterday that we need to get individual equity options involved here. This one we have Wilshire 5,000. Wilshire is a total market index. So this is like the S&P encompassing everything. I think we're down, at one time it used to be, I think it said 5,000 or something. So that was what we're around for stocks. Because of mergers and that and everything in general, we're running out. We need more companies out there, and we need more entrepreneurs. We need. And if the driver is just money, and everybody's figured out how to live through a great recession, splurge really doesn't fly. But we do have a nice Generation Z who are pretty well twisted from birth, that everything is top of the line. So they have a different taste, more like the yuppie one. Every generation is like that. The ones that go through the Great Depression, their kids can't figure out why mom and dad are not spending their millions and still eating liver and things of that nature. It's because that's what they remember. They are shell-shocked. Whereas then the boomers go on and woohoo! And then they step on a great recession. Woohoo! And then their kids go through why am I going to be in my 60s before I pay off my student debt? Yeah. Gazowie, Batman. I mean, if you really think about it, some of these people, what is the relationship of the debt to their IQ? Gazowie. Short there. All right, call buying Wilshire 5,000 is a total market thing. So this is everything in general here. I think at one time we had like 14 or 17,000 companies. I think at one time we had 800 car manufacturers. Everybody jumped on it, kind of like digging for gold. Or I guess it would be the cannabis business these days, right? Everybody needs to get on board. We're going to go agrarian. Yes, wait till we go agrarian and we have industry type of hemp growing. I can see the price just kind of like when we put the old boll weevil gene in cotton, and cotton price cratered. Because the boll weevil went, ew, this tastes like rhubarb leaves. But what I learned in biology over the summer is that the insects adapt. And so it is a mute point. So just let it ride. Just let Mother Nature be Mother Nature. But Kev, shut up. All right, put buying here. This is what's this on indexes. So this would be the index put call ratio. I suppose I'm going to have to put some lines on here up here, but we got frothy here and we got frothy here. So the GDP, if the GDP is strong, I be buying puts. All right. Against stuff. And then also mostly if I come across anything on earnings, that's to start it off. And then I'll just end this here with the pink dots, the pink dots, the pink dots. All right, pink dots. This chart here is NYA, New York Composite. Smokestack companies is what I call them. These are going to be your conglomerates because at one time you wanted to get to the New York Stock Exchange. Now, well, that's a different story. All right, so what do we have? We basically have a gap. All right, school of theory here. Is it either a measuring gap, because it's definitely not a breakaway gap, because that's a breakaway is what happens at the beginning. Then you have a measuring gap, which is halfway. Kevin said that the stock market's going to double. All right, so this could be a measuring gap breaking out above here. That's usually a pretty good bullish sign. The other one is this a exhaustion gap? Well, what do we have going on? Little pink dots is the McClellan summation index. And basically this is, we'll just say that this is the blood or oxygen to the market. You can see places where there's divergence. It took some time. This is a daily chart, and then she, he, or it rolled over. Same diddly bop over here. Here was pretty strong. The market, grunt. Lots of activity, but just couldn't muster the price, right? So this is broad-based, basically, but not a lot of conviction on there, right? I'm going into the election, right? So what do we have? 2016, here's the bottom. This is the first interest rate hike, took off, didn't really like it. Now we have new highs, and here's your blood. You're either going to get a transfusion and pumped into it, all right, which would probably be our little tax scheme to repatriate some coinage. Or this is it. And then we're going to work our way back into the sideways again here. Here's the NASDAQ. You know, just basically draw your little trend line underneath it. Draw your little trend line underneath it. You know, here was it on the way up. Little bit of divergence. Rolled on over. This would be your China deval. Bounce up. First interest rate hike. Oh, I love that pattern. Whee! Or a little pokes its head up. This is where crude oil's sitting at right now, I think. Shh. This is supposed to be a teaser calf. All right, and so here's the blood, pushing blood and oxygen, the pink blood, right? Oh, did I actually get that right? Did you pay attention to biology, Kev? All right, a couple of this, come on up, stall. Whee, we swing and it goes the other direction. Run to the hills, I say, run to the hills. That's what I say. So little pink dots, and so that's that. I will send this out. How about to Twitterville? Twitterville's a great place. You can follow me at Twitter. What's happening? I'm Happy Friday. Happy GDP Friday. GDP Friday. Anyway, composite. QQQ. SPX, SPY, IWM. Oh, what about the futures guys? I suppose this futures guys. And then this one is having issues. And then Kevin, how come you didn't play the YM? And the DIA. Look at that. That's what I get to do. Used to be a software in 2000. Quick keys. I think that's what I'm doing. Bloop, and all this little advertising. I suppose in theory, well, I guess what do they call that? Use. So that's blah, 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 blah. Happy Friday. There's your chart. All right, I'm going to wrap this up by saying, everyone have a wonderful weekend. Go to kevinbance.com. and follow the directions and send you out a trial of my spew. I send out when I can, which is basically whenever I'm in front of my laptop. I enjoy the hunt. I go out, I find the opportunity. I then get you in the boat, walk you through the field, however you do it, and it's your job to pull the trigger. I just take you to the fishing hole. And then you have to take me to the watering hole. Those were the days. Yes, nothing like running around with high-powered rifles early in the morning, and you still smell like beer. No, doesn't work for Cav. All right. And then they're also at YouTube. Follow me at YouTube, too. Sign up there and listen to me go on and ramble on. Videos, the ones I have to subscribers, I usually give it a week or so, or to make sure so they can get in. They want to get in, whatever. I give them an ample amount of time to get in before I make it public. Most of it's rambling, educational, informative, weird, but I make the videos public. Subscribe to Kevy. So go to Kevy Vance. KevinVance.com. come over to this, sign up for the subscription, and then we're off and running, like live videos and stuff. Right? So rock and roll. Everyone have a wonderful weekend and take care. And see you Saturday, Sunday night, and Monday, London from Arizona. This is Kevin. No, that's all right. Trading London from Arizona. This is Kevin. All right. Take